I say this a bit, but it's still mind-boggling to myself how I can easily do 3 videos a day without even trying to find some interesting news, some newsworthy stuff to talk about. I remember struggling when I first started, 2009, 10-ish era. One every couple of days, one here and there. Okay, one every day. Got to that point, but I never did the weekends. Then I'd sometimes do if I found something interesting on the weekend, 2 videos a day. Still maybe one on the weekend, maybe not. Then it was like pretty solid, at least 1 or 2 on the weekend and 2 a day. I sent myself, just today alone, 1, 2, 3, 4, 5, 6, 7, 8 different things. I'm not doing 8 videos today. That's not happening. But I'm thinking of this. I'm like, I could have enough videos for today, tomorrow, and Saturday. It's just insane. And I remember like when 2013 came around, it was like an exciting year and things were happening, like, whoa. And then 2014 came around, it's like, wow, it's even kind of outdone 2013. And then 2015 came around, outdone 2013, and 2016, etc. And 2017 appears to be no slouch. 2017, we are off to the races. I mean, there's stuff coming out of everywhere. My last video, the EU had Jean-Claude Juncker. What else could I do? What else do you want us to do? What can we do? Nothing. The EU's done. It's finished. Okay? And what else have I told you? And it's not just the banks. It'll be other financial institutions and other large corporations. Financial in nature or not. Doesn't matter. Cooking the books. Problem over here. Financial records. We thought this. And funny enough, I've got 2 things I want to talk about because they're both directly related to that. Separate articles. And I thought to myself, I was reading them today. Interesting how Caterpillar, the company, has been named specifically in some previous Weblot reports in sales numbers and things of that nature. Basically the company kind of going down. But again, it was the name of the company was in there. And from Zero Hedge, the first thing, the next Ponzi scheme, $4.6 billion long-term care insurer to liquidate in Pennsylvania. Biggest healthcare failure ever. Biggest healthcare failure ever. How can I come out here and do these kinds of videos if the freaking recovery is here and everything's fine? This is not, another healthcare provider failed. This is the biggest to date healthcare failure ever. You don't hear the ever part of the stories when it's just a little one-off or a little economic bubble downturn for a little bit, and it's nothing. Zero Hedge says, we spent a lot of time about the various pension Ponzi schemes that will inevitably wreak havoc on the global financial system at some point in the not-so-distant future. That said, you should also be keeping your eye on so-called long-term care health insurance providers who, as Penn Treaty Network of America Insurance teaches us this morning, have been perpetuating a Ponzi scheme of their own. So how does a health insurer create a Ponzi scheme, right? I mean, it's long-term health. What does this mean? How's that possible? After 8 full years of legal battles between state regulators, investors, and policyholders, Pennsylvania Court Judge Hannah Leavitt signed off on a plan Wednesday to liquidate Penn Treaty Network America Insurance and its affiliate, American Network Insurance, the largest such health insurance liquidation in U.S. history. The decision leaves solvent insurers, their owners, and customers to pick up the cost for more than 70% of the up to $4.6 billion in projected long-term care claims expected for 76,000 aging Penn Treaty customers nationwide. So they are expected to have to pick up the tab on 70% of the potential $4.6 billion expense claims. Pennsylvania Insurance Commissioner Teresa Miller said that after a grueling 8-year legal battle, the company's financial difficulties were deemed too great to be remedied. You could probably take that little quote and use that against any Ponzi scheme, regardless of the institute. Banking, finance, healthcare, Caterpillar. Too great to be remedied. Well, that's because it's a Ponzi scheme. And when you take in money and you pay out that money to yourself or other people, and you're supposed to not be doing that, and more money's coming in constantly, so no one really knows it's happening. Yeah, too great to be remedied, end quote. Insurer Commissioner Teresa Miller today announced the Commonwealth Court approved of petitions to liquidate Penn Treaty Network American Insurance Company and American Network Insurance Company, with policyholder claims to be paid through the State Guarantee Association system, subject to statutory limits and conditions. After a long and difficult 8-year legal process, the court's decision to approve the liquidation recognizes the company's financial difficulties are too great to be remedied, and that consumers are best protected through the State Guarantee Association system. However, remember that 70%, 30% is left? I think the 30% is what the State Guarantee Association system might be paying out. The rest of it's up to those other people I mentioned. Just like their pension Ponzi scheme brethren, long-term healthcare insurance providers take in premiums today and make a series of actuarial assumptions that justify a promise that they'll be able to satisfy a steady stream of payments at some point in the distant future, long-term healthcare. Unfortunately, like with pensions, the math all works out beautifully when the insurance companies model 7.5% annual returns on assets. But in the real world, where global bond yields are hovering just above 0%, the math is slightly less than rosy. Over the past several years, long-term care insurance has posed significant challenges to insurers on a national level. The pricing of these policies for many insurance companies has proved to be insufficient as a result of claims greatly exceeding expectations and low investment returns. So is it one of those more than the other, like the lower investment returns more than the claims, possibly? Claims have exceeded expectations due to incorrect assumptions concerning the number of policyholders who would drop their coverage and the number of policyholders who would utilize their policy benefits, as well as the cost of providing those benefits. The pricing deficiencies and resulting financial losses have resulted in many long-term care insurance companies seeking large premium rate increases and some leaving the market altogether. In the case of Penn Treaty and American Network, the Pennsylvania Insurance Department determined that the magnitude of additional premium rate increases needed to remedy the company's financial difficulties exceeded 300% on average, would severely harm policyholders and would not be permitted by state regulators, leaving no alternative other than to place the companies into liquidation. And while payments from other insurance companies will cover these abandoned Penn Treaty policyholders, only so many insurers can fail before you-know-who, taxpayers, will be called upon to bail them out. And when they tell you all these old, sickly people, long-term health care providers, how do you and I say no to that? Oh, we can't let them die. We can't, gotta, all right, go ahead. All right, go ahead for the 14,000th bailout. Okay, we get it. Women and children, they'll put that in your face. Women and children, old ladies, oh, okay. Another bailout, okay. We forgive and forget, okay. Policyholder claims will continue to be covered by the State Guarantee Association system pursuant to law, and policy claims will be paid subject to the applicable State Guarantee Association coverage limit and conditions, like all insurance companies or guarantee companies. They don't expect for catastrophic failure of one of their companies that they insure. And when it does happen, a catastrophic failure takes place, we don't even have kind of the amount of money needed to back that, which would make you argue or think, maybe not argue, you would think, whoa, that's just one company. It's only one company that failed, and they have money. They're not just broke. They have money. It's going to be liquidated now. So why does 70% of that need to be paid for by other parties? You have the insurance. Pay the insurance on it. Pay it 100%. Well, we can't. Why? Because we don't have the money. It's one insurance company that failed. I thought, or not insurance, well, health insurance company, but the guarantee insurance company guarantees not only this one company, they guarantee everybody that does that industry. And you're telling me one company failure, we're tapped out, can't help here. Are you not surprised? Do you understand the level of this? So when I tell you that, FDIC, your funds are FDIC insured in the bank, in the DIF fund that, should a bad bank day come, bank failure come, there's normally around, I haven't followed it in a long time, but around $50 billion in there. 50 billion. I'm sorry, how many trillions are in the banking system in deposits accounts? In the trillions. We got 50 billion on tap in case any problems happen. Oh, I feel safe. I got this, brand new huge boat, yacht. Let's say I got this giant yacht. LJ Step 4 is a millionaire. I got, a Mr. Big Shot. I got a freaking yacht now. Check me out now. I'm on a boat. And I got a lifeboat on my boat, of course. But the lifeboat is a blow-up raft that your 4-year-old child could fit on. Would that make sense? Would that be the kind of insurance policy? Your insurance policy is the life raft. Well, it needs to be able to handle at least, half a dozen people on this smaller size yacht. Not a 4-year-old child. Right. I mean, that'd be silly. So why do we have a 4-year-old child's worth of insurance of $50 billion in DIF fund? Well, because if a bank failure of epic proportion happens and then another one happens, let's say, and the $50 billion is eaten up and gone, the FDIC, can go to the Treasury, U.S. Treasury, for what I last read a while back, and I don't know that this has changed, and if it has, let me know. But last I read, they have a $500 billion window that they can get money from, so to speak, from the Treasury directly. So $500 billion. Again, how many deposits are there in money in banks? Trillions and trillions and trillions. Somewhere between 5 and 7 trillion, I think, as far as bank deposits go. I think that's the number. So again, and remember what they tell us. Well, if you have an account up to $250,000, you're covered. And could you imagine how many people might have $250,000 in their account in this country? I mean, there's 350 million of us. There's probably quite a number of us that do. I say us as if I had that in my account. I do not. Boy, would I love to. But the money would never be there. Now, my personal belief is that the government, due to dealing with mass panic, would then step in, write a law instantly, pass it, Congress, President. Everybody relax. We'll fix this. But are they going to fix the ones from 250,000 and above or not? That would be the question. So policyholders should continue to file claims as they have been in the past and must continue to pay their premiums in order to be eligible for Guarantee Association coverage, Commissioner Miller said. State guarantee associations were created to protect state residents who are policyholders of an insolvent company that has gone out of business. In each state, other insurance companies licensed in that state pay into a guarantee fund. Oh, kind of like the banks pay to the FDIC, the DIF fund. Okay. And that money is used to cover claims when a company becomes insolvent and is liquidated. And Zerohead says, but don't worry, there's about $2 trillion worth of long-term health insurance claims that will need to be covered at some point in the future. Should be fine. Everything should be fine. And again, they just said it. All these companies got to pitch in for this fund. And how many years, how long have long-term insurance companies been around? Forever. And in that state, forever. They don't have enough to cover a $4.6 billion. Sorry, gone. One company failed. So how's the insurance working? Horrible. Why? A bunch of companies went out? No, just one. Just one. So, speaking of the other financial problem, gigantic, enormous company, Caterpillar, federal agents raid Caterpillar offices as part of tax strategy investigation. You may know that term in JSNIP 4 speak as someone done been caught cooking the books. Okay. Federal officials seized documents and electronic records from 3 Caterpillar Incorporated facilities, including the global headquarters downtown on Thursday morning as an apparent part of a criminal investigation of the company's tax strategy. That's a nice way of saying it. It's just, we got to look at your tax strategy. It's like your business plan. Can we look at your business plan? Sure. What kind of tax strategy do you have? Well, we're going to... No. Someone may not have been paying their fair share of taxes. Maybe a little backroom deal with the boys and girls, the club, the Clintons, the Baracks, the Obamas. Maybe Trump has realized, hey, you may have been able to skate paying your taxes now before I took office, but now it's going to be a level playing field for everybody. Maybe that's what's happening. I don't know. Investigators from an alphabet soup of federal agencies lined up outside the main administration building, a data center in East Peoria, and the logistics center in Morton. Caterpillar is cooperating, a brief statement from the company read. And by the way, I wonder if when federal agencies went into, big old worldwide Caterpillar, globalist Caterpillar, if they went armed with, assault rifles, kicking doors down like they do in like a small farm, organic farm where the husband, the wife, and the kids run it, a couple of neighbors or whatever, operate it, and they come in full guns blazing. I wonder if they went into Caterpillar offices that way. I'm just curious. The investigation appears to stem from revelations about the company's tax strategy as outlined in a 2009 federal wrongful termination lawsuit brought by Daniel Schlicksup. The lawsuit alleged that the company shifted profit. Oh, here we go. What did I tell you about cooking those books? Shifted profits overseas into offshore shell companies to avoid paying more than $2 billion in U.S. taxes. See, that's also cooking your books. Guys, these numbers are wrong. This is how much taxes we're going to have to pay over here in America. So let's move it off these books. Move it off these books. Put it on these offshore books, shell companies, offshore, different corporation countries, so that we can get tax break, and we're good. Except those profits were booked in America. You need to pay American taxes. Okay? Caterpillar, in its annual 10-K filing with the U.S. Securities and Exchange Commission last month, acknowledged a criminal investigation into the tax strategy. The company said in a statement Thursday afternoon that the search warrant related to that issue, among other things. Federal officials would not confirm the substance of the investigation. In the February filing, the company included the following statement on legal proceedings. On January 8, 2015, the company received a grand jury subpoena from the U.S. District Court for the Central District of Illinois. The subpoena requests documents and information from the company relating to, among other things, financial information concerning U.S. and non-U.S. Caterpillar subsidiaries, including undistributed profits of non-U.S. subsidiaries and the movement of cash among U.S. and non-U.S. subsidiaries. So, what does that mean? What does that mean? It means that crap I just told you about Obama and Clinton and Trump coming in and maybe going forward with this is null and void. Because this was, February filing, the company issued the following statement on legal proceedings on January 8th, 2015, the company received a grand jury subpoena, so the feds were already looking into them. Previous statement, null and void. Doesn't matter, not even kind of. Why? Because the issue at hand here is another company cooking their books, modifying their accounting ledger illegally, tax money owed, etc. Again, this is beyond cooking the books. Caterpillar's going to have a little problem to deal with, maybe a big one. And since their sales pretty much, matter of fact, that's, Caterpillar stock price history. Surprisingly, the stock hasn't hardly affected by anything related to this case coming out, recently. But So got a 5-year. It was down from 2014 all the way to 2016. It was down from 2016, excuse me, to 2017. Started climbing again, but then towards January, I think we're gonna have some issues. And remember what the Webbot said a while back? Caterpillar, it's gonna be doing one of those. Not gonna be a whole lot of need for the construction equipment just yet, apparently. So, anyways, take care. On to my final video.